Hi, this is Kyle with International Futures Group in Chicago, a division of EFG Group. Just want to give you some comments on today's grain trade, today being Wednesday, October the 28th. We'll start with corn. You saw we did get a burst up to first resistance yesterday. Trade that 87.5 level, failed miserably. As far as corn goes, there's no story, there's no catalyst, there's no nothing. We've been in a range-bound trade forever. In my mind, there's nothing that's really going to change that at this precise moment. Moving on to the wheat market. Wheat had that short cover. Last Friday it was revealed in the commitment of traders. They were pretty heavy short, and basically the other market participants came for them. You've also got the weather stuff going on, but in the big scheme of things, we don't have a whole lot of demand and generally uncompetitive in the global landscape as well. So wheat was able to drag the corn higher. Wheat didn't do much these last couple days, or at least yesterday and today. Sold off a little today, but nothing really damaging yet. We'll see how we fare when we check out $5 again in the DEES contract. At this moment, the only thing you can say is Kansas City continues to lose ground to Chicago. That appears to just want to keep on going. What's interesting is that spread does very poorly when the market rallies and tends to try to get some of that ground back when the market breaks. So after the close, you had the Fed, or you had the Feds shortly before the close, but the big dollar move has been happening ever since. Dollar back, basically trying to knock on the door of that 98 level. Generally not a good thing for the wheat market. We'll see how it trades tomorrow. Soybeans did okay for a few days, and the meal market has just spoiled the party. Soybean meal traded through the 300 level today. You noticed we have tested it and tested it and tested it. Finally took it out today. You would notice there's some really large orders getting filled on the way down. I believe they filled at least 1,000 at 300 bucks in the DEES meal. You got to think perhaps end users that are stepping up, but even still, meal acted terribly. Meal spreads acted terribly. Bean spreads were terrible. So really, until that changes, the recent bullishness that you saw on that November soybean chart appears to have been spoiled. Maybe tomorrow, if we can consolidate and get a bit of a daily range trade going, that would be better. But the price action, the spreads, and especially the meal, really heavy today in the soybeans. So that's all we have. Again, I'm Kyle with International Futures Group in Chicago. Give us a call if you have any questions.